What's going on, guys? Randy back again here with another video. In this video we're going to backtest VIX 301S. Okay, I'm actually going to look at like what happened during the week and how we could have capitalized on it. Like, I wasn't really on the charts that much this week, I wasn't focused, but like I just want to see like what opportunities that were there for us, and just to go through it, and then use the same information that we're gonna get from this video on the following week. Okay, so before that, I'm first going to show you like what sort of things, like what are the rules that I follow, like what is the trading plan that I follow. Okay, my trading plan is pretty simple. Okay, number one is find order block on the H4 or above. Okay, then number two, place your fib, place your zones, place your 0, 50 and 100% zones in the order block area. Okay, then wait for price to mitigate your order block and touch any of these levels and look for entry. Then you spread your Fibonacci from the high to the low point depending on which direction the market is, and place your target at the 161.8. So simple and clear. Okay, you maybe can take a screenshot of this if you want. And yeah, all right, so now let's move on to the charts. Okay, so now we're gonna actually, let me put that back in. Okay, that way we can follow along correctly. Okay, with the text there. Okay, all right, so now number one, okay, is find order block on H4 or above. Okay, so now we are on the H4 time frame, and actually I'm only going to look at from like I'm only going to look at price action from like Monday. Okay, so time session break. Okay, this is Monday right here. Okay, so this is Saturday, so obviously that's Monday. Okay, and then what I'll do is I'll take out the lines. Okay, so now here's price action from Monday. Okay, from past Monday. Okay, so number one, find order block on H4 time frame. Okay, H4 above. Okay, bam. Okay, we got order block number one done. Okay, place your 0, 50 and 100% zones in order block. Okay, how I like to do that, I'll take my Fibonacci from the high points to the low point right here. Okay, then place a line. Okay, it's my 0 line, 0. Here's my 50, and here is my 100 level. Okay, and then once that's done, I remove the Fibonacci level. Okay, and then wait for price to mitigate to your order block and touch any of the levels and look for entry. Okay, so obviously price got out of the order block, it went like, it gave us the impulse move, and then it mitigated back to the order block. Okay, so now when it does this, you need to go to the lower time frame. When I find my order block on the H4 time frame, I usually look for entries on the M15. Okay, so you just go to M15. All right, so now we are on the M15. Price looks a lot more clearer. Okay, price looks a lot more clearer. Okay, sorry, this is actually the previous week. This would have been Sunday. Okay, we'll get to this week as well. Sorry about that. Okay, so now, okay, this is our order block. Okay, this is what that one candle looks like in the lower time frame, M15. Okay, so we have this impulse move right here, mitigation, price touch the 50%. Okay, the 50% level in the order block. Okay, so now when price does something like this, what you would need to wait for is probably like a candle confirmation. In this case, this is like an inside bar. Okay, so that's an inside bar, green candle. Okay, wait, green candle, then red. Okay, that's your first entry, obviously. And then you open your trade right here. Okay, I'm only going to show you like one entry type. Okay, the other entry types I will do that when I start my course. Okay, so this is just the one entry type. Okay, so then boom, you're in price. Okay, you are in the trade. Okay, so now for target, what do? Remember, this is now, we are on number, what number are we on now? Where is the thingy, the text? Okay, it's gone anyway, but it says that, sorry guys, okay, so number 3 is Okay, you spread your Fibonacci. I mean number 4. This is number 4, the last one. Okay, you spread your Fibonacci from the low point to your high points, depending on where the market is going. I mean, in this case, this is a downtrend. In an uptrend, it will be from the high points to your low points. Okay, so we'll just get that right. Okay, from your low points to your high points in the downtrend market, and then from the high points to the low point in an uptrend. Okay. Okay, so spread your Fibonacci from the low point to the high point, and your target is a 161.8 level. Okay, and you should do something like this. Bam. Okay, you see, look at this now. Price from the order block, impulse move, mitigation, touch the 50% area of your order block, gave us the inside bar, enter, market dropped. Okay, no drawdown, like zero drawdown. There was no drawdown. Like this was going to be like a peaceful trade. The only problem here is just the time factor. Okay, it's just all these things right here. Okay, this will be a little, if you know what you're doing, like that's why it's so important to backtest. When you backtest and you know that something like this is supposed to happen, so whenever you get pullbacks like this, don't panic. Okay, don't panic, just hold your trade. And also, like I'll show you how to like enter again when the market is doing like this. Okay, but that will be something that I'll discuss in the next video. Okay, then look at what price did. Bam, 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 target hit. Okay, so like, you know how volatile these indices pair are. Like you may start here with like $10, and like if you were scaling it all the way down, when you get here you're probably going to be like at $300. Okay, off of one trade alone. Okay, and then when price does something like this again on the M15, you can be looking for, when you're in an M15 like this, you can be looking for more opportunities. Okay, and how do you enter? It's the same, you enter the same way as you do on the higher time frame. Okay, like look at this is an order block right here. Price went in it, closed red, entry. Okay, if you missed that, you would have gotten this one. Okay, price fell, mitigation dropped. Okay, and then after your overall trade was done, you also have this order block right here. Okay, you got this order block right here. Okay, impulse move, mitigation 50%, market dropped. Okay, target, spread Fibonacci from the low to the high, target 61.8. Okay, so like in this case, it would have been this candle that would have been like my entry signal. Okay, target 161.8. okay, and then bam. Okay, bam, target hit. Okay, and on the way there were plenty of opportunity to scaling. You see, you had this order block right here, mitigation entry, and you even add this one right here, one entry. You see another one right here, entry. Here there would have been nothing, but no biggie. You would have had this, and then this as well. You just keep scaling in until your target is hit. Okay, and then I'll just give you one more example, and then we're done with this video. Okay, so I'm going to clear all of this right here. Okay, I'm going to remove everything. Okay, and go back to the 4-hour time frame. Okay, all right, now we are back in the 4-hour time frame. Okay, so remember, this was our first move. Okay, this is the move that we just traded. Okay, now price got to this level right here. Okay, yes, this is an order block. Okay, this is also like a key point of interest. Okay, when price gets here, we would have expected a buying opportunity. Okay, you can do the same thing. You put your 50% Fibonacci. Okay, 50% Fibonacci, then you do something like this. All right, then you go to 15-minute time frame. Okay, then when you get to the 15-minute time frame, obviously you wait for like a like some sort of candle pattern on the 15 on the, you look for some sort of pattern on the 50% area. Okay, so in this case it would have been this. Okay, that would have been entry. But then this trade would have been a losing trade, but no biggie, you know, like if you lose, you lose small. When you win big. That's the old principle. Okay, maybe target somewhere around here. Okay, and then stop loss around here. Okay, you see how small the stop loss is compared to like your target. Okay, then price went in your direction. And obviously when you see a break like this, you can just move your stop loss to entry. That way, if the market decides to go down, it takes you out of the trade without losing anything. Okay, and then market does something like this, bam, then here you would have been kicked out of the trade. If you had moved your stop loss to entry, you haven't lost anything in this trade. But if you had, it's small compared to like the gain, compared to if like the trade went in your direction. Okay, so like that's something that you need to keep in mind. Okay, all right, so now price does something like this, then boom, it breaks out of this area. Okay, when it breaks out of this area, now you switch your bias. Now you're no more a buyer, you're a seller now. Okay, so now you move to the higher time frame, like the 4 hour again. Okay, you go back to the 4 hour time frame. All right. Okay, now we are in the 4 hour time frame, right? What do? You look for an order block. Okay, so now can you spot an order block? I can. All right, so here's the order block right here. Bam, we got our order block. Okay, so let me delete all of these just so it's not confusing. Okay, we got our order block, and you can place your 50%, 0%, and 100%. Okay, so remember, you got our order block, impulse move, mitigation. You move to the lower time frame, 15 minutes. Okay, when I find the order block on the 4 hour, I always go to the 15 minutes for entry. Okay, so now in the 15 minute time frame, what we had was bam, 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 touch the 50%, bam, that's your entry right there. Easy entry. Okay, now you're in the trade. For target, you spread your Fibonacci from the low to the high point. Target is 161.8. Okay, 161.8. Okay, now what do? Now it's the waiting part, the most difficult part. You just wait. Bam, 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 bam. You see price went in your direction, and it comes like this to challenge your psychology. But look, it never went back to your entry. Okay, when it does something like this, you can just move your stop loss to your entry and just wait. Okay, if something like this happens, like that's why it's so like I said, it's so important to backtest, because when you backtest, you know that okay, this is just to test your psychology, you know, to test your patience. And if your psychology, you're not strong mentally, you will close your trade here. Okay, but then look, price fell. Okay, this would have been a lot of patience. Okay, price went down, and TP hit. Okay, target would have been hit here. Look at this. Okay, zero drawdown, like no drawdown at all. Like as soon as you enter, especially like on the 50% level of your order block, there's usually no drawdown. Okay, that's like the first entry that I'm going to teach you guys, and I'll teach you the other entries in another video. Okay guys, so pretty simple. Just remember the rules. Okay, remember the rules. It's number one, look for your order block on H4 or above. Okay, then once you find your order block, you place your 0, 50, 100% levels. Okay, and then if price touches any of those levels, and you find and it gives you like a entry pattern, you enter the trade, and then you spread your Fibonacci from the low point to the high point, depending on where the market is going, from low point to high point, and 161.8 is your target. That is it for this video, guys, and don't forget to like and subscribe, and I'll see you in the next video.